So, Antonio Silva, our CEO.
Good morning. Hope you are enjoying Porto, and definitely you are going to enjoy MAIA. Okay, so MAIA, it's an industrial city nearby Porto, and there is a lot of technology companies, so that's why we chose to be here. This is a beautiful park, Tech MAIA, and we have been here since 2010, so a long time, and we are expanding. So we are going to take you guys in groups of 10 people to see our facilities because we are in expansion phase. We are fully packed. In October, we are moving to a new brand office. That's a building that is being built around the corner downstairs. So next visit, maybe in a few years, you can come and see much bigger facilities. Anyhow, today I'm going to talk to you a bit about my favorite subject, that is Nonius, as founder, and I'm going to focus a bit first why we exist, and how we do it, what we do, what impact we create to the market that we operate. Then I will tell you a bit about our history, about phases. So it's next year we're going to do 20 years. So although it's 20 years, we are still really young in company terms. And then I'm going to finish my presentation on talking a bit about the key factors and what I think that is really important that we do, and that distinguishes us from the competition and has been making us growing the way we have been doing it. Anyway, feel free to ask questions. There is be a lot of information, but feel free to ask questions during my presentation. So first, this is the impact. I don't have like a mission statement slide. I think the mission should be inside us, and I always present this slide as the ultimate representation, the ultimate KPI that represents our mission. And last year, more than 230 million guests were impacted by our technology. So our mission is to improve experience of guests in our clients at our hotels through technology, and also to help them in improving their operational efficiency. So currently we operate in more than 5,000 hotels around the world, and spread for more than 100 countries. We are more than 200 employees, so this is the numbers of the beginning of the year. And we have offices in 17 countries. In 11 countries, 17 offices. The other countries in the world we service through some service partners. So we combine a direct approach to the market with also approach through partners. Company was founded by me and Lionel back in 2005, and currently I am one of the main shareholders and continue to be the CEO. Our main market is hospitality. We work for hotels, and I'm always joking with my peers that I am one of the oldest CEOs in the role. Okay, a lot of startups, a lot of companies, but I am one of the oldest. So every time I go to the event and I catch up, now I don't see anyone on this role that has been more time than me on the company, on the market. And so what we do, so we have built a lot of technology to impact the guests from the moment they prospect. So from the moment someone looks for a hotel, we have technology up to the moment they exit the hotel, they do the checkout. So, and there is a lot of stages, such as the first, on the prospect side, we have a mobile app. So some groups, they hire us to build a custom mobile app for their guests with a loyalty program, and the guests, their clients are able to book, to do a reservation, to search for a hotel on that mobile app. And we have plenty of functionalities on mobile app from check-in, like facial recognition, scan of the passport, automatically filling the check-in prior to the arrival, then inside of the hotel to open the door with the mobile phone. So it's the most comprehensive and featured mobile application in the market. Then we have also plenty of technology that is inside of the hotel on the green part, with equipment that builds an infrastructure for the guests to use the Wi-Fi. So Wi-Fi still connectivity is very important, and when the guests they arrive to the hotel, they expect to have a greater connectivity through Wi-Fi, and we have built technology to allow our clients, the hotels, to provide their guests with excellent Wi-Fi. Other technology that is the interactive TV. TV is an important component inside of a room, especially because it's a big display. And if I want to watch my series, if I want to watch my Netflix or just have a big screen, I can use that big display. And we have built technology for the guests to use that big display inside of the room. First, to welcome them to the room and to show them around what the hotel does, and then for allowing them to play their own content in the TV and guaranteeing their security, their credentials, that the guest in the room beside does not interfere with this experience, and so on. We also built for everything, for this to work really seamless to the guests and in a way that the hotels, they don't need to have multiple people operating each of the systems. So we have built what we call the hub, the integration services, like an automation, a bit of AI in the middle that allows to make all this seamless and all this integrated without the need of multiple people to interface or to configure the systems and to operate the system. So everything is automatically with the PMS, that is the main software, the property management software, that is the main software of a hotel. So our technologies are fully integrated and everything is automated. So the hotels, they don't need to have a big team and things just happen like a bit by magic. So I'm going to talk a bit about the product. As I told you guys, so we have the pre-registration using the app. So before arriving to the hotel, we send an email. The guest downloads the app. He can download or just use a web app, like a link. It does not need to download actually the app. But the app is needed if they want to have mobile key, for instance. So for some facilities, technology is still not there. So the guest needs to have the app. And they can do the pre-check-in, and they can fill details. So the hotels, our clients, they grab the data of the guest. That is very important, especially for direct bookings. So to promote promotions, because there is a lot of platforms that are a bit of extortion economy that is grabbing a lot of commissions and so on. And the hotels, our clients, they have their biggest aim is to have direct bookings. So through that they can provide better prices to their clients, to their guests, and they can build loyalty and they can build recurring revenues. And that's, although hotels is based on occupation and based on reservations, they have a lot of people. There is some groups that are our clients that they have these guests, they come getting back to the hotels, or they use other hotels of the group, and we enable them to have this through the mobile app and through the loyalty program. Other functionality, great functionality, is being able to open the door. This was really critical during COVID to avoid contacts, and we were able to continue to grow in terms of number of clients during COVID, and we kept us busy a lot with the contactless technology we developed. And one of the features that is really important is the mobile key. So I don't need to get the key from reception. I can skip reception, go directly to the room. Other functionalities, connectivity is really important, and we made a tool that is very easy to manage and seamless. So if you check in, you can just use your room number plus your last name and have great internet. For events, the same. So it's although it's something that has been around for many years, for me it's the most critical solution we implement in hotels, because without connectivity nothing else works, and people will feel that they are away, that they are not connected with the world, and this continues to be the most used technology that we provide to the hospitality market. TV, welcoming the guests, controlling the TV, a lot of functionalities, showing content, journal to avoid having collaterals inside of the room in paper, so it has everything updated, a lot of information. So the interactive TV that we have at our houses with connected to a telco does not suit an hotel. For a hotel needs a specific solution. We have built through the years. It's a solution that we started to develop back in 2009, and it's one of our most sold solutions. Cast already talked a bit about that. It's nowadays with all the platforms, Netflix, HBO, Disney, Prime, many others. So it's important to use our subscriptions and to watch our content according to our needs. Live content nowadays is becoming less and less used. It's more about people, and the TV became again a crucial element inside of a hotel room, because it's a big display. See it as a big display, and we have built technology to be able to allow the guests really to use that big display without the constraints of, okay, someone is going to take my credentials and things like that. And it's also a product that we do. With this product, we won the HTNG. HTNG is the most important technology forum for hospitality, and we have won already twice the Tech Ovation. And in 2020, we won the Tech Ovation with this technology, because it was recognized as a very important feature for the experience of the guest. Room control, also, it's not just being able to control and predefine settings for certain kinds of guests according to their profile. So we are already working on that, and on the mobile app we are able to do that, and we are already developing a new product that is like in the entrance of the room, replacing those old really bad looking controllers by really LCDs and displays that through conversation or through chat can be able to operate open the blinds, switch off the lights, making the room more warmer, and all of that. That's some part that we've been working, and we will release next year lots of products in that room automation to provide a better and seamless experience to our guests. Restaurant reservation is very important. Nowadays, majority of the 4 or 5 star hotels, they have great restaurants, getting great chefs and so on, and it's needed software to manage all of that, reservation of a table, all that's integrated with the hotel softwares, and we have also a solution for that. Checkout, and that's it. And here are some logos of our clients. We serve the big groups from Accor, and some of the most exclusive hotels. For instance, Belmont, it belongs to Louis Vuitton, and it's the Louis Vuitton hotel brand, and have some of the most exclusive and iconic hotels in the world, and we feel really proud to serve many of those. And how we did it. So I already talked a bit about why we exist and what is the impact that we created, and how we do it. And here is a bit the timeline of Nonius. And the company started in 2005, and then in the beginning was just about internet. So back in 2005, access of the internet was provided by the telcos, by the operators, and we realized that there was a demand on hotels for guests to have access to the internet. At that time, hotels were providing either a modem line through the everything was connected, and Wi-Fi was coming. The Palm Pilot came with the wireless, so that was great because that gave us a use case, and we developed an equipment that allowed the hotels to be a small telco inside of the hotel, and that was our first product, and we developed that product for many markets. It was not just for hotels; it was for any public venue, any facility that would receive persons. Our technology would work, and that was what we did in the first couple of years, and integrations. We developed that for cruise ships, also for technological parks like this. Even these parks used our technology many years ago, but the reality is, after 4 years, we felt a bit lost because we had so many markets, so many things, so many use cases, and it was very difficult for the team to understand what was the vision and our strategy. So we had some opportunities to merge with other players that were horizontal, like we were at that moment. But the reality is, the two founders, myself and Will, our background was to develop products that would work on the internet, with internet technology. So our decision was, okay, let's see who accepted the most our product, and it was hotels. So we realized, okay, it's great we love to develop products. Let's focus on this vertical, and let's continue to develop other products. And that's when we started to develop like the IPTV, voice, and many other products. And Portugal is a very small country, a very small market, so we needed to go global. And we in 2011 we chose the first country that we were going to expand. And why was Brazil? First, it's language, but that was not the main reason. The main reason was that we look into the spectrum of the market, of the companies that we wanted to compete with. So we were a very small company. We were not even in the radar of this big of the main players in the market, and we realized that none of them was able to have success in Brazil, and many of them had tried, and none of them. Okay, so if we were going to go to a different market, let's go for a market where they failed, and let's try to be different. If we succeed in a market where our competitors failed, then I think we are going to get noticed at least. And that's we went to Brazil, and in 2 years we were able to become market leaders, and it was a great development for the company. In 2011 there was also a big event. The subprime crisis only impacted Portugal in 2011. It took a few years to impact Portugal and to impact the hospitality market in Portugal. The last quarter of 2010, first quarter of 2011, we had any work. We just had to downsize a bit. At that time we were like 35 people. We had to downsize to 20, and simply didn't have work because the main bank that was financing the hospitality market in Portugal bankrupt. So no loans, no investment, and our business model was pretty much capex based. So it was based on a hotel invest, buy a solution from us, and then we may had a small contract for services, but it was like 80% capex, or even more, like 90% capex, 10% opex. So at that moment, one of our strategy was, okay, so we need also to build recurring revenue. So when the next crisis happens, we continue to have revenues, and we don't need to downsize about the company, and we continue to. So in this moment, we change a bit of our sales strategy and our business approach to build recurring revenue. So started to build products more on a SaaS model, so software as a service, and so on. And that's what. And we have been very successful on that. Nowadays, more than 50% of our revenue is recurring. So that puts us in a great position, because basically our fixed costs are covered in the beginning of each year, and we can invest in growing on new products. And if something happens in the market, so we are okay. So we are able to sustain. But even the crisis, they bring great opportunities, and the opportunity for us was to acquire. So we had a big competitor here in our local market in Portugal, and we were able to acquire them to make a great deal and to grow to almost double the company by an acquisition. And that was the first time we did an acquisition and we were very successful. We made the consolidation here in Portugal, and it went well, and we realized, okay, so this is a good model. So we were able to grow organic with regional units, and also at the same time combining with small merger and acquisition. And that's what we've been, that has been our growth strategy since then. So we acquired always small companies. We never acquire a company that will change the culture of the company. So what that means, now we are 200 people, so we may acquire a company that brings like 20, 30 people, no more than that. Does not impact the culture, and in parallel we open subsidiaries in other regions with direct. When we start having a lot of clients in the region, so that's the time when we decide, okay, it's time to go there and open our own subsidiary and approach the market directly. At the same time, we are a technology company, and in technology, every innovation you build becomes commodity. So we are always trying to avoid being on the commodity side, and to have value to our clients, and for that we need to release every year new products, new functionalities to avoid the commodity. A TV is just a TV. We need to create value in the top of the TV with solutions. And a few years later, the TV manufacturers, they come with the same functionalities that we did 2 or 3 years later. So we are always trying to escape. Same with Google, with the big technology players. Something that we create today, in the few years' time, that will be for free from a big technology player that will give that, basically will integrate those features in their platform, and that's always happening. So we need always we have been able to cultivate always an innovation culture inside of the company, and been able to release products, and we take, for instance, our R&D is taken to costs. We see R&D as a cost, not as an investment. So we don't capitalize R&D costs. You guys are from business, so we don't do that. Why? Because the company without R&D will be a different company. So we won't be the company that we are. So if we start capitalizing R&D costs, then how long it will, for how many years? So if I want to be fair, I don't know for how long that innovation that we have built, it will provide us sales, and it will provide us an edge over the TV manufacturers, over the big voice manufacturers, over the Googles, and so on. So we need every year we need always to be, and as the company grows, we have been able to growing always the investments in R&D, the team of R&D that is producing and keeps us always to maintain our profitability levels and our EBITDA ratio, if you want to just make it simple. One of the things that I think is interesting to tell you about this story is back in 2015. So we had seed capital, venture capital, lot of some financial investors, but we realized that the financial investors, their vision is always short-sighted. It's always 5 years, 8 years, 10 years, and so on. So and we like in around this time we had some deep misalignment and disalignment between the founders that had like a vision, a very long-term vision, with the venture capitals and the seed capital. And we had like a venture capital getting on board on 2011, others on 2005. At a certain point, the boards start becoming a bit political, a lot of interest. The interest is not really the company, it's not growing the business. It's about serving their interests of the shareholders, and that brings a big problem to the day-to-day. And at a certain point, myself and Will now, we love to work together, and we love the team that we had built at that time. So we had an option of selling everything and so on, doing different stuff and following the normal entrepreneur model that you create one, go and create another. But the reality is we felt that we wanted to do in a different way. We wanted to see this as our legacy, and we could build something different. And if we are able to continue to grow this company at a rate of 20+% a year that we have been doing it, and we do it for 40 years, then I think there is not so many people that have been able to do it. Okay, so I see it in that perspective. I could have done 5 companies during those 40 years, but will I be more happy doing those 10 companies? Will be more sustainable for my life? Would be better? Don't know. But the reality is, Lionel and myself, we decided that we love to work with the people that we have been working through the years, and we took a bold move, and we did an MBO, and we paid out. So at this moment, I always tell that Nonius has been built with minus 12 million. What that means is, if we take out all the money that investors put, plus the money we had to put them, is minus 12. So this company, and I'm going to show you the numbers, was built with minus 12 million euros to the moment. Okay. So I don't know if there is any type of KPI for that, but it's not like the company was done with an investment of X billion. No, the company was done with minus 12 million, because at this moment, if I take out all the money that was invested, minus the money that we have paid to the venture capital, seed capitals to exit, it's minus 12. And currently we don't have a net debt, so we are balanced debt versus active, so it's minus 12, and we have been able to build this beautiful company. So we continue to do acquisitions, so we don't need having financial investors to do acquisitions. Okay, we are able to do it ourselves. So through the years, the founders were able to do this journey of becoming managers, of becoming businessmen, and be able to work in a lot of different subjects. And we don't need to have financial. It's an acquisition. And sometimes even when you put financial, it's even worse, because they don't understand what is the value, the strategic value of an acquisition. And I have here a big example. In 2018, we acquired 2 companies, Guest You and Big S, that brought us the technology of the mobile application, the application and check-in, the online check-in to the hotels. And those 2 companies, they were startups, a lot of investment. One had like 5 or 6 million investment, and the other 2 or 3 million investment, like 8 million investment, but companies were not profitable, were not able to have a sustainable business model, already with debts. But we thought, okay, that technology is really useful, and we foresee a massive usage in the future of that technology for the automation and to streamline operations of the hotels. So we acquired this company. But at this moment, if we had like a private equity fund that the main KPI is an EBITDA, you guys can imagine the impact acquiring a company that is bankrupt with debts has on the cash flow and as on the EBITDA. EBITDA means valuations. So it's not strategic. If you are a financial investor and you want to exit in 2 or 3 years' time, are you going to say yes to that? No. But COVID struck in 2020. So what you guys think that happened in 2020 by Nonius having a mobile offer? So we had already our digital guest journey, and we converted that in the contactless guest journey. The reality is we went for COVID with a lot of work. Not revenue, but work a lot. And I will tell you guys a bit about that. Why not revenue? Because we took another bold move, and then we could see strategic and the long term, and we realized that hotels didn't have guests. Although we had, at that moment, we were able to have a lot of recurring revenue, the reality is they didn't have guests, how they could pay us. So we took a decision and of not, because we had a very good financial health. We were a very healthy company, so we were able to say to our clients, okay, you don't have guests, you don't pay us. Our revenue went to half, our EBIT to a third, but we still kept on the line. We had a small profit on that year, but we were able to help our clients. And every time you help someone, what happens? It comes to you. And we grew a lot since COVID. So in 2021, it was important really to speed up. And what we did, our competitors that forced their hotels to pay out the contracts and all of that, you can imagine the friction they had created in the market. So gave us a lot of opportunity, and we expanded. We went to Sweden, to USA, there's a small operation in the USA, France, did more acquisitions, same in 2022, but 2023, so from in 2023, last year, we more than doubled the business model that we had before COVID. And the reality is, okay, this is going too fast, and we have done this. So we need to slow down because it needs to be sustainable. And sustainable is not just about saving our clients, hotels, or not having paper in the rooms. It's about people not having a health, not having burnouts. Is having a very sustainable company in terms of processes, in terms of having the structure needed to continue to maintain quality service, so the clients keep recognizing you as the best company providing this. And that's it. Okay. So and 2024 is going to be a year that we are consolidating our presence and slowing down, so we can prepare the next speed up. Okay. And so, as you guys can see, this has been our clients, our customer ramp up. See, you guys see that even during COVID, we were able to grow at this pace in terms of number of clients, fueled by our mobile offer, our solution. So we had a lot of traction from the market because we had a product to serve them. So that bold move of acquiring a company with great product but without a business model, suddenly we had a business model a few years later. Okay? Maybe we were lucky. Yeah, you never know. You need to put yourself on the line to have luck. That's what I always say. In terms of numbers of revenue, you can see that this was the big mold, a bold move, another one to, you don't want to pay, you don't pay. Simple as that. We lost only 5% of the clients after, but the ones that we didn't lost, that started to pay us, they gave us so much more that we had to increase the prices in the last 2 years, like 5 times, just to slow down. So that's how we slow down. We increase prices and we maintain profitability. Because if you don't have the capacity to serve, in order to maintain the quality that you want to serve, you need to increase the prices. Okay? And last year we finished the year with plus 30 million, with an EBITDA of 6. So we keep, I always see this as a good indicator. We keep more or less the same ratios as a good hotel. And it's slow down, increase the prices, continue to innovate, and make sure that our service levels, they keep on the level that they have been doing it. Okay, so what have been the key factors for this journey and to get into this position? So we have been through already 2 major crises, subprime and COVID, and I feel that nowadays we are more resilient than ever, and resilience is something that the company has been growing a lot in the years. So first, I think this was key. Back in 2008, 2009, is finding our purpose. So what is the market to who do we sell easy? And that was the answer. The answer was hotels. Hotels are just coming to us and buy. So for guys that are not marketeers, that are technology, okay, let's sell to the guys that are knocking the door. And that was easy. And then just make it global, because it's a vertical guest IT of hospitality. It's not like the market worth billions. It's worth 100 millions. So, but if we are the biggest one, it's a decent business. So and that's it. That's second. Continue to avoid escape a commodity. So we have built an extensive solutions portfolio. And the reality is, on average, since our foundation, we have plus 95% of customer retention. So that's massive. So we don't talk about churn, we talk about customer retention. And our KPI for this year is keep 97.5% of the contracts, renew 97.5%. And that's how we approach. We don't talk about churn, we talk about customer retention. And for us, more than 60% of our new sales are on the top on our current client portfolio. That is also huge. So the value of our client portfolio, every time we develop a new feature, a new product, it's huge for us. So we treat them really well. So to them, we didn't raise the price 5 times. For them, small prices only, okay? We raise the prices to the new clients. So if you want to come on board, then, because for us it's much more important to provide an amazing service to an existing client than to get a new client. The cost of selling to a new client is huge. It's much cheaper. It's much more efficient to keep happy a client, and then he brings us more hotels and so on. We still have our first clients as our clients, and from one product nowadays they buy 12 solutions. So it's amazing. Then innovation, always escaping commodity. It's not for us. It's a cost. We need to have R&D, always building new products, because the other players, the big corporations, they are always are looking to these small companies, searching on the verticals, seeing what they are doing and incorporating on their product roadmaps. But it takes them 1, 2, 3 years. So we have that 1 to 3 years to come out with a new functionality. And if you want to build a sustainable business, we need always to be innovating. Now, the reputation is our greatest asset. Long-lasting client relations, because then you can cross-sell other products, other solutions. Strong partnerships. Although I know that Samsung, LG, they are going to come in the future with functionality that I'm selling and I'm making a lot of money today. I have a great partnership with them, because then I integrate with them and they promote myself for things that the clients ask them and they don't have at that moment. Okay, so it's part of the deal. the technology world works this way. It's like Google, all these enablers. We need to have great partnerships with them and not being annoyed when they release something that screws up our business. No, we just need to be always a step ahead, because as a smaller company, we can be much more agile and we can have innovation flowing and we can change much quicker. So we don't. And I will explain a bit later why we are so agile also. Invest in changing. Experimenting, failing is part of the changing process. I'm not going to speak. You guys, I'm sure that you have a lot of pitches about that. Okay, but it's here. Operation efficient. It's very important. A talented and dedicated team. It's not about having just talent. You need to have people engaged. You need to have people engaged to what is the goal and what are the objectives, and stable products. It's not just about delivering innovation. Okay, every time we deliver innovation, there is a period where the product is not as stable, so support can go up, customer satisfaction go down, so we monitor everything and we invest a lot on making the product stable, so we can just focus in new products, or else you are only supporting an old product. Sometimes it takes more time to deliver, but we delivered right. So now the next challenge, the challenge for the years to come, is to deliver technology first time right. So that's a big challenge. We are delivering second time right now. So a few years ago it was like at the sixth or eighth time right only. So nowadays it's second time right. But robust process. So that's where process needs to get into the company. Agile, we maintain the agility, but we need some process to guarantee the quality of the output. And low cost of capital. This is something that has been very crucial for us. So our biggest stakeholder in terms of cost is the banks. So we are able to compete with a startup. A startup, they get a lot of money, but it's short time, because I know that the cost of capital is huge. Because I know I have the minus 12 million, so I know how costly was the capital. those first couple of million, how much it costs us a few years later. So someone has to pay that, and who will we pay? Will be the client. So, and nowadays I'm able to be very competitive with our clients, because I don't have this need of providing this exit to any financial investor. Next, team and owners alignment. It's very important. So one of our values is teamwork, and having everyone aligned to what are the goals is very, very important. We have a very simple organizational structure in the company. So the main shareholders are board members and executive team. So we have advisors to help us on the process. We are very formal in the company. We keep all the we have thought about governance, so we keep everything on the good practices. And we have team aligned around missions, with kickoffs, with quarterly letters. So we explain a lot of the context. So we have some policies, but I call it directives more than policies, because then you lose agility, and we manage more about explaining the context, so people are able to develop and follow what we do. A lot of employees that we consider key are shareholders of the company. Through the years, it's not stock options. It's being actually a shareholder. Okay, so I went through that .com crisis, that a lot of stock options that never worth anything. So I always thought that didn't worth anything. So we give really actual shares, and this year these shareholders are going to receive dividends. So this is old-fashioned, but having shares and receiving dividends. But I think this is the basics of having a company. If a company is not able to distribute dividends, sooner or later, even Google now this year is going to distribute dividends. So again, it's the next one will be Amazon, I'm sure. So, having a long-term vision. The main shareholders, the two founders, we owed 90% of the company, and our vision is a legacy vision, not like 5 years or whatever. So if Nonius continues to be a great asset and pays me a return on my equity there, so why should I change it for shares of other company? And especially if I love it, if it's so what's the problem of not doing an exit, of not selling my shares and buying yachts and buying whatever? So if I like to work and come to the office at 9 and leave at 5 or at 6 or at 7, and I love the people that I work, what's the problem? Is there a stereotype for an entrepreneur? I don't know. I've seen so many of those. I've been with many of those, but for me, okay, it's nice. You test it once, you try it once, and then I think it's a different journey. So sustainable growth is very important when you have this legacy vision. It's about speeding up when you need, and about slowing down when you feel that quality is being impacted. And quality has been the major KPI, and because for us reputation is very important, because 60% of our revenues come from the current clients, and all the time, and we need to keep that. We need to keep the perception from our clients of our quality. That is great. And clients, when they start giving you a lot of solutions, a lot of work, they start monitoring a lot, because they see, okay, I have a lot in risk with Nonius. So if they fail, they have a big impact on my business. So we need to ensure them that we are not going to fail. And also for them, it's really important for us to show them that we are able to deliver great quality. Finally, through the years, we've been able to create our own culture, and our main values are integrity, dedication, quality, and teamwork. And this is the base of our culture, and that's how we do things here at Nonius. And we have a great team and I'm very proud of my team and the team that we will be in the years to come. Okay. Thank you, and feel free to connect, and